Stocks fly, but is that what we should really be looking at? Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, welcome back, Sam, on the back of a US Fed interest rate decision last night and some interesting movement in the market since then. So, how are you going today, Sam?
Good, Chris. Good to see you.
Great to see you as well. Now, it was an important night last night. There was a little bit of anticipation around what the Fed was going to say. There was sort of people thinking it was going to go one way, but again, or like thinking they're going to keep it the same. But then, there's always this anticipation around the wording around it and what's going on there. So, can you maybe start off by giving us an overview of what actually happened with the Fed this morning, our time, actually?
So it was the rates are on hold as expected. They reiterated the same things as last time. It almost looked like a copy and paste in a lot of regards. So the U.S. banking system strong and resilient. There's a need to fight inflation, and inflation's persistent, and they want to get inflation down to 2%, which is essentially saying they do want to keep that door open, whether that's believable or not, for one more rate hike. So yeah, it was pretty bland. Now, one positive thing though was that during the press conference, they said that the U.S. economy was surprisingly strong.
Yeah, right. So do you think, just personally, I'm interested in your perspective on this idea of the 2%, because I'm starting to hear people say sort of what you just mentioned, that the 2% might not be realistic. Do you think in their minds that a number that's closer to 3% might be starting to be in the back of their minds as where they end up? Or like, do you think they really believe the 2% when they say it?
Who knows? Because they've changed their mind so much, and that's what traders are stuck with debating, whether they believe what Jerome Powell's saying each press conference or not. And that's why, the bond market's so scary to them. And that's why they have to kind of make these meetings a bit of a copy and paste and be careful what they say, or else people will jump the gun and do what they don't want them to do.
So that probably leads me into what happened after that, because really stocks rebounded quite sharply. And do you think that this is going back into bull market mode? Is this what you were just describing? Is this the jumping the gun aspect of it?
Well, there were great gains by tech. Materials didn't do so well. And I think a lot of this is based on the assumption that if the Fed pauses in December as well, that somehow means that they're totally done hiking. So there is that assumption by analysts that, okay, they pause again. That's it. We're going to pivot and the stock market's going to take off. I don't think we're out of the woods yet. And if you look at the chart, I remember a couple of weeks ago, we were talking about these headlines, really emotionally charged, saying, the U.S. stock market is hot out of the gate and it's rocketing upwards, and all these really emotionally driven headlines were coming out as if the U.S. stock market was going to the moon. If you look at the chart on a daily chart, it's been falling. It's just been falling, having a slight bounce and then falling again. And even if you look at now this big recovery, it's just in a kind of a descending channel. It hasn't really turned around, so to speak, and broken out of this descending trend pattern. And if you look at the trend line we were talking about before, where the S&P 500 has been going up for about 1 year, then in early October it broke that trend line that it was bouncing off. So a bit like a ramp going upwards, and then it fell through the bottom of the ramp. That's what it looks like on the chart. And I remember us talking about it's over. It's not going to go up anymore. This is a strong signal saying it's going to go down. And then sure enough, about 2 weeks later, it started that strong descent. And now it's entered a market correction since then. Now, one thing that can happen that's not a guarantee, but a possibility, after something breaks below a trend line like this, a rising trend line, it can want to retest it from the bottom. So but as an analogy, if I fell through this floor and I tried to jump back up, I could hit my head on the ceiling, which would be my floor now would become the ceiling. So all that's happening is this could be swinging back up to retest the level it fell down from, which is at an angle. And you have to see if it gets rejected down from there.
And full credit to you on that chart too, because you were pointing that out weeks ago now and sort of following that through. It's played out exactly as you described back there. And I think you were sort of highlighting at the time that it's really one of those rare situations where you do have that clarity in, like, technical analysis can be hit and miss. You know, you always get these situations, some signals not being following through as strongly as others, but it was one that you had quite a lot of conviction in because you could really see it lining up and really forming that sort of perfect break as it did. And it's played out exactly like that. So I think people do need to put a little bit of weight on your analysis there about what happens next, because it does make sense to me that sort of what was support becomes now the resistance as it tries to push back up there. So,
well, if there's no good news coming out and the chart looks very, very bad, you have to ask why there are positive headlines coming out. So that's it.
And that's something I've noticed as well, that people tend to, and I say people generally, you know, you're talking when you get sort of the, let's call it the vibe, the general sentiment from the market participants, whether that's on Twitter or wherever you're getting that from. We do tend to have a situation where people have been wrong-footed for quite a long time now, where they tend to build this sentiment and these headlines coming up in the completely wrong direction through what's been a very, very choppy time. So I suppose that's what you come to expect in markets like this.
Yeah, I agree. And a bit of hopium as well, that, you know, AI fever and these sorts of things are going to make the bad investments come back or keep going up for people who bought in a bit too high. Now, look, it could keep continuing. Who knows what's going to happen? But so far, it hasn't.
No, so far it's been clear exactly as you pointed out. So I suppose we're all interested in gold, obviously, and the gold US dollar chart, it really hasn't moved that much. I mean, it's sort of maintaining, from my perspective, it seems to be maintaining a little bit of that strength, or sitting at those highs as it was before. But can we maybe get you to update and map out for us what you see as the scenario for the price going forward for here for gold specifically?
So gold didn't move that much. Now the stock market did take off upward, which is potentially driven by the hope of future liquidity, which can be a good thing for gold as well. But gold's been taking a lot of its advantage recently from risk. Now, if risks are disappearing, that could be a bad thing for gold. But what you see is gold was on a support level of 1981. This is in US dollars. And gold has hugged that support level very, very strongly. So it was not able to break that. The daily candle just finished this morning, and it is closed over that 1981 support level and started to go green on today's new candle. So look, if it does break that support level, if something happens and it falls through the floor, there's just air below, basically, that it could fall for a long time before it hits another support level. However, so far it hasn't broken that. It's actually bounced up from that. And you can say the same for the way up. To make it back to its all-time highs, or a resistance level that I've spotted around 2064, which is far away. It's about 5% upwards. That's a lot of dead air above, where in the past, gold has just spiked almost straight up to that level. And if it's going to stay where it is, there's not too much above to stop it either.
And that's a really good point, because there's clear, like we often refer to it in the trading markets, there's clear sky above that level, because we're in the all-time high. Beyond all-time highs, there's no sort of resistance levels or those floors and ceilings you're talking about to really stand in the way. So it is quite exciting if we, when we get to that point where we're getting price discovery happening again at brand new prices where we haven't been before. So that's really something exciting to look forward to, I suppose.
Yeah, with AUD, very easy. There's not much above, but with USD, it has been consolidating for a few years, and gold USD, the times it has reached about 5% higher, it's just gone almost a straight shot upward to retest those highs. So Yeah, we'll see if fourth time's the charm.
Yeah. Well, there was no such thing as a triple top, yet here we are looking for a. There's definitely no such thing as a quadruple top. So this time, fourth time's a charm. Oh dear. Well, thank you for that, Sam. I appreciate all that analysis today.
Thanks, Chris.
Thanks everyone for watching. Remember, reach out with any questions or comments on those social platforms, whether that's for me, whether that's for Sam, wanting specifics on those charts or whatever it is, reach out and we'll try and get back to you on those. That's all we have for today. We'll be back next week, probably on Tuesday, to discuss all things markets and metals with Alex at this stage. So until then, have a great rest of the week and a great weekend, everyone.